So here's the 4-hour time frame. You can see here we have kind of like a market maker buy model playing out, and we came into this daily order block right here, and that's kind of where we marked up the range as well. So there's the daily order block. Here you go. You can see if we zoom in right here, it's perfectly tapped into that right there, and there's also a small volume imbalance that price reacted into. So again, you can see there's the first consolidation, the second one, and at the bottom would be the smart money reversal. So we'll mark it up in red right here. This would be the smart money reversal, which is where price reacted into that daily PD array. So here we drop down to the hourly time frame, and you can see we have the small fair value gap right here. That is known as a BISI. Price traded into that and is starting to trade higher. So that was kind of like target that buy side liquidity up there. We'll mark that up right there, the buy side liquidity. So price traded down, took out that sell side, traded into that fair value gap, and then traded higher to take out that buy side liquidity. So here we're going to drop down to the 5-minute, and you can see we have this big old SIBI right here, and we marked that up, and the consequent encroachment, which is 50% of that, you can see aligns with that black line that we have right there marked up. So that is basically just used for as a target in this situation. And there's also 2 red lines right there, which the times are 23:00 to 2:00, which is basically 11 p.m. LA time to 2 a.m. LA time. Now, if you look closely, you can see right here, if we have a large range day inside that red lines that we had marked up, we can expect a power 3. So it says a large overnight price run, we avoid the opening range and expect a PM session discount. So right there, the dotted line is 5:30 LA time. The opening price creates lows in the AM, and then in the PM, it sweeps those lows and then goes higher. So it's kind of like a power 3. So since we have a small range, we don't have to worry about that. And again, the AM session starts at 5:30 to 9 a.m. Los Angeles time. So here you go. There's 5:30 to 9 a.m. Right now, I'll point a little red line at it to show exactly what I'm talking about right there. 5:30 to 9 a.m. So here is the 3-minute time frame. You can see there that blue box is the smart money reversal pretty much. It's inside the hourly fair value gap. Price came up. There's a breaker, but you'll see it on the lower time frame. You can't really see it there. But there's the order block. Price traded into that order block and then rallied higher, taking out all those buy side liquidities that you'll see on a smaller time frame, as well as trading higher up into that consequent encroachment that we had marked up earlier of that SIBI. So you can see here's the 1-minute time frame. That blue box, there's a macro right there, which you can see right there. It says it'll give you a setup or reverse. In this case, we reversed. You can see there's the breaker block. Price traded into that breaker block, created some liquidity, came down to that breaker block that also aligned with that 3-minute order block. And from there, it just went off higher. There's another macro right there that targets liquidity, which is in the purple box. You can see the purple box, it says 750 to 810. Price will tapped into on-tap liquidity. So there you go. Price entered that breaker and that 3-minute order block right inside that second macro that's purple right there, and it go heads higher and targets that buy side on-tap liquidity that you see right there that I'm pointing at. So price taps into that 3-minute order block and starts to slowly head higher, and there you go, taps into that on-tap liquidity. And that's pretty much how that first macro was a reversal, because inside the hourly fair value gap, and the second one was used as the entry to take out the on-tap liquidity. And there's another macro right there which just says price will target the AM session protection. So there's the macro right there. There's the AM session. So you can see that big candle was new, so we can ignore it. And that is where the AM session traders will have their stop loss at that orange line right there. So that big old wick candle, we can ignore it since it's news. And yeah, so that's just where people would have their stop losses in the AM session because they're looking for sells. So you can see in that last macro right there, that yellow macro, price will basically target the AM session buyer or seller protection, and it enters that fair value gap right there that I'm pointing at. We head into that fair value gap, and then we head higher, taking out that AM session buy stops. And that was kind of what we expected and ended up playing out smoothly. So those were the 3 macros in the AM session. So here's the afternoon session, which is 10:30 to 1:30 p.m. Los Angeles time. And there's a macro at 12:15 to 12:45. You can see price traded into that fair value gap right there. There you go, at around 12:30 something, I believe, inside the 5-hour macro. So you can buy from that fair value gap, which is inside again that PM session. So that 5-hour macro, 12:15, 12:45, you can look for a setup and you can target buy side liquidity. In this scenario, we had a pretty choppy PM session. Price came into that fair value gap and then slowly headed higher. And right here, I'll show you where the buy side liquidity is, but it ended up trading higher, taking out that buy side liquidity and also trading into that consequent encroachment that we had marked up. So here's the buy side liquidity that we were targeting, and it also traded into that consequent encroachment. So this is why it's good to have a layout of what you expect the day to be like, what is a possible target area, and then use the macros, because even if you don't trade the AM session, you can use them as a directional bias of where price might head. And then yeah, it just helps a lot with directional bias and just knowing where price is going to go to next. And you can see there, we took it, that consequent encroachment right there, and we swept right through it. Again, you don't want to get too greedy. You just want to get to the consequent encroachment. You don't want to target that high up there. That consequent encroachment is more than enough. And it's all you really need. And again, I want to tell you guys this one thing, that if you have a big AM session move, then you can expect that you're going to have a small PM session move. So although the PM session does look like it was pretty big, it was a pretty big move. It wasn't like a fast move. It was just kind of get in, get out type thing. So you can see right here, we have a huge AM session, which means that we have a small or tight range in the PM session, which you can see there, we kind of were going up and down inside the PM session. So remember, keep in mind, if you have a big AM session, then you'll have a small PM range. If you have a big AM session, and if you have a small AM session, you will have a big PM move. Here we have a big AM move, so we'll have a small PM move, which is why you see price was bouncing around so much.